28K or 10K. Now, forgive me for the meme titles and thumbnails, but this is widely been discussed, in the crypto circle on Twitter or crypto Twitter, and by many YouTube commentators and analysts and speculators. And quite honestly, neither of those particular numbers are very relevant until we get outside of our current trading range. So welcome to Landy's Crypto Corner. Today is going to be February 23rd, 2023, and we're going to take a look at Bitcoin spot price action here on the daily. And we're going to try to determine, well, when we're going to break out of this range, because it's going to happen at some point, and maybe some point soon. We're going to start out today by not looking at Bollinger Bands. That's typically what I start out with, or support and resistance. In fact, this is just a PVA candlestick chart. Now, PVA is just volume profiles on your candles. So all I'm looking at here is a nice colorful chart. It switches it up. Actually, I'm so used to it now, I don't even pay attention to the actual candles or the high volume candles. I'm more just looking at the overall gradient of the chart. But main reason that I have this on is because I want to call attention to our current range that we're in. So the current range that we're in, I had pulled a fixed volume profile for this entire range of these three highs that we have here. And you can see that the point of control for this range here is around $23,000. So that would imply that if Bitcoin begins to trade below this very high volume, highest traded price of this range at $23,000, that we're going to go somewhere around the lows. So if we trade below, we're going to go somewhere around the lows where the value area low is. And in this case, it's coming in right about the median of the previous higher low that we have. So, that's still within this overall larger range. Now we are, of course, trading in the upper half on a new high here. And of course, we have confirmed this as a new high and a swing fail of this value area high up here, which is also, of course, the high over here from August of last year. Now, in this case, we have confirmed a swing fail, which would give targets back down to support, which we tagged yesterday and the day before, which is around these highs here at 23,750 or so. And that would imply that if we do start to trade under the open and close of these highs, or of this high, I should say, but there is two highs here, then that would imply that we come down somewhere around this green bar, which is right in the middle of this point of control, runs right through the middle of this candle. This is a little bit different way of doing order blocks, but this is an order block. We have a trend of, this is the way that I do order blocks. There's many different ways. Some guys don't like it, the way that I do order blocks, and either agree or disagree. But in this case, we have a strong trend down, followed by an anomaly bar or a green bar in this case that breaks that particular trend. It didn't break the downtrend in terms of the actual trend itself, but what it did do is it broke the consecutive candles here, because we had 5 consecutive candles down, followed by what I identify as an order block candle right here in the point of control of this particular range. Now, of course, this range has developed more since then, but in this case, we then followed that up with 3 consecutive down days before another order block candle down here. And then we had liftoff above the highs here, setting that low that brought us to our new highs. Now, why do I bring this up? Because if we do start trading down below these, the open and close up here of these bars, we're going to go test this order block candle somewhere around, 22.7, 22.8 area to the high side, around 23,250 to 23.3. And there's a reason why I'm bringing all of this up. And we'll get to that in just a moment. And it has to do with where the Bollinger Bands are coming in. Now, when looking at the range that we're in up here, we also can pull, and I've already done so, a fixed range up here. And you can see that we are now intraday, and yesterday closed below the current range value area low. Now, that is another indication that if we lose the support of these candles over here, that we will be testing the downside there. And then in this case, we'll just make this yellow. Then we will be testing somewhere around that point of control, around $23,000 to around 23.3, which is, of course, that order block candle that I pointed out here. And we can just color this in. We'll just, I want the prices here, so I'm not gonna, we'll not color it, but in this case we'll take the open and close here. So around 23,244 to 22,763. So in this case, you can see that we close below here. We're going to come down to somewhere around the point of control, either on the top side of the order block candle or the bottom side. All right. Now that's typically, by the way, a kind of a pit stop. I mean, you can see this as a lower high. I still would be looking to the value area lows. I'm not saying, that's my bias right now. If we do start closing back below here, if price comes down here intraday, let's say, tags the point of control here, and then regains the wick low of this upper range, then, it has a good chance of trying to come up and make a run for those highs again. But in this case, you can see yesterday for the current range, we rejected the point of control after testing up there. So we swung the high of the prior day candle, which is the Wednesday candle. So Thursday's candle swung it, and then proceeded to close below the close of the prior day candle, but they close inside the wick. So we're seeing a lot of very low term time frame wicky price action and consolidation sideways below this in and around the value area low of this current structure. So that would be our big engulfing up bar here, or big engulfing candle up to this range and over. So now I bring this up because I want to kind of tie this in with where Bollinger Bands are coming in. So there's our third standard deviation, our second standard deviation, and our first standard deviation. So while keeping these on here for just a moment, I know it's an assault on your eyeballs, but in this case, we have closed below the first standard deviation here at 24,380. And as I've said, like anything below $24,000, we're going to go test around the 23.5. If that holds up, great. Nice bounces are good off of that area in the lower term timeframes. But if we begin to lose the first standard deviation here, we're going to start coming down to test these lower areas. And we don't really need the volume profiles here, so we can get rid of those. But we do want the support and resistance here. Now, if we lose this particular candle cluster high, you can see that next lower high here, which is where we have an order block, is coming in right at the 20 simple. I almost said 200. It is not the 200 simple. But in this case, this is the 20 simple. Now, the 20 simple is coming in at around 23.3. It is heading up towards price action. So anywhere around that 23,250 to 23.3, I would expect at least some lower term time frame bounces. But, I kind of have the feeling that because of this bar here, we passed that point of control for the entire range, which is at 23,000. If at any point we do so, drop 23,000, which just happens to be this breakdown candle right here. So we'll bring back the larger range real quick here. So we dropped this breakdown candle, which broke down below these lows that then set this pretty nice low here that pushed us up. Get below that breakdown candle, and I do think we run back to these lows around the first standard deviation to the downside, which is now 22,180, 22,2 area, depending on your exchange, of course. Then down to somewhere around the $21,000 area where we can see the second standard deviation to the downside on Bitcoin here. So when looking at all of this, what is it really telling us? Well, what is like the Bollinger Bands and all this stuff telling us? If Bitcoin fails to get like a really nice bounce here, this being the Friday candle, which, by the way, we have a 5-day closure today that we'll look at in just a moment for a momentum pivot, just as a reminder. I did cover that yesterday. But in this case, now, if we fail to regain at minimum the first standard deviation to the upside, 24,381, and even if we did, it's got to beat out that wick high at 24,600. So that was also, we kind of tested both sides that I talked about yesterday, which was test up to 24,6, 24,5, 24,6 area. We kind of tagged it all in one doji here, and then down to the mid $23,000 area with the low coming in there at 23,612. So if Bitcoin fails to set in a low basically here, which would be trading back above at minimum 24,500 on a daily close, so this Friday closing candle, we're going to be targeting these downside candles. And even if we do see a low come in and we trade above and close above 24.5, and then specifically have to break above that wick there at 24,612, we can trade towards that $25,500. And, we kind of evaluate things from there, because only upon a closure above there can we start looking to around 26.5 to almost 26.6. Other than that, things are downside angled. We have BBWP is cooling down, and we're creating a what I like to look at as like a ranging indication on the Bollinger Bands. So we're going sideways and increasing the third standard deviation and the second standard deviation. So we're still expanding the Bollinger Bands to encompass the entire trading range that we're in. And in this case, it's, around that $21,000 to around $25,000. So I'm not necessarily looking for things to break down to somewhere like $10,000 from here. In fact, we would have to break down below 21K. If we break below 21K, then I think we can start looking to some of the areas that I talked about yesterday, like $20,000 to $20,500. If that fails, and that's this cluster of candles over here on this high, then we're looking back to around the lows of this entire range here, which is around $18,500 to $19,000, to around the $17,800 to $18,000. Below there, it's very likely that we see things fall apart, and we had to, retest the actual macro, or well, not a macro low. This is a major low. It has not been confirmed as a macro low because we have not broken out above 25,300 on a weekly close just yet. We may not see that happen, and that's where looking at 28K just doesn't make sense until we're at least on a weekly close, or a daily close above 25.3. And even at that, it's not going to happen in one bar, in my opinion. It's going to take a couple bars, in that case, a couple days. And that's kind of where I stand on the whole 28K to 10K debate there. And we can only take what's given to us in this particular trading range, and that's exactly what we're going to have to do. So in this case, we do have we have volatility starting to cool down. We have BBWP below the moving average, and the moving average has a negative slope. We have Stochh also pointed down, and in this case, the momentum pivot on Stochh is going to be 24,422. That would only be an initial cross back up, as we do have both the K and the D read down. That can sometimes be a setup for a fake out. So if we were to close up there above, like let's say the first standard deviation, but we failed to actually put in a low rather, and then retraced it right back down, and then tagged the 20 simple or something. That it's kind of like the setup where you would see the K cross back over the D read and then dump right out. So you want full confirmation on those, especially if we were to see some sort of a failure to actually create a low structure here. When looking at RSI, we have that bearish divergence is starting to show itself here. I wouldn't call this played out. I'd still be looking towards the somewhere around the scale midline, which is around 23,131. And in this case, we would see no bullish divergence on any drive down from that particular area from the last low on RSI, but there would still be and any closures above 20,650 or so. What was the actual close here? 675, we'll call it. Any closures above there would create hidden bullish divergence on the other side of this. We did close a 2-day candle, and we have closed outside of the first standard deviation, again giving me the bias that we are going to head towards the 20 simple. Now, the way that the 2-day closed, the 20 simple is going to continue towards price action as long as we're above it. So heading towards the 20 simple, somewhere around that 23,100 area is a downside target now for the 2-day chart here, where we have put in a high on divergence, and we are looking at the next area to the downside being $22,000, where the first standard deviation to the downside is coming in. So we have that high is also put in on divergence. We also see that the momentum pivot, while still facing up, now the new momentum pivot for the next 2-day closure to keep momentum to the upside would be 24,416. And again, that particular pivot number is right in my, what I like to call the kill zone. If you fail to see a low put in on the daily, still 24.5 is the area that you want to see closed above, and specifically on the daily, that would set 24.5 would set a daily low, so it's going to run that 24.6, but you'd want to see a closure above there to get any continuation from the daily. Of course, we're seeing the same momentum pivot on the 2-day here. The 3-day also put in a note. It actually avoided putting in the high because it did close above the wick low. And the wick low here was 23,841. The closure came in at 23,943. But we did close, we closed technically above the 3-day first standard deviation, but because the first standard deviation continues up as expansion is still occurring on the Bollinger Bands, then we're now below and have briefly retested in and around the first standard deviation to the upside, which is 24,175. Now, this is giving us the bias on the 3-day that if we see another closure and or a full bar close below the first standard deviation, we're going to be looking to around that 20 simple on the 3-day chart, which is again coming in around 21,500, in this case 21,491, and all the way down to 18,800 if things were to start getting really wrecked to the downside. Momentum pivot's going to be $24,058 in the next 3-day candle. You can also see that we have that the upper $26,000, the upper $26,000 area is the second standard deviation. So if we did see another 3-day closure above the first standard deviation, and specifically we meet the criteria on the daily, we start closing outside of that 25.5 area, pushing that third standard deviation around 26.5. So that's the second and third standard deviation to the upside on Bitcoin. Then we can start targeting, upper $26,000 to $27,000 areas, all the way to around 29.5. Now you will see that this is starting to cool down a bit as we've gone sideways in terms of its expansion up. And that is because, well, we have seen that we are mean reverting. Now, we're not getting contraction of the Bollinger Bands just yet, but if we do start seeing, if we do start seeing price just kind of crawl sideways and, of course, stay above the 20 and above the first, I would say in and around the 20, simple on the 3-day, you'll see this cool down. Bollinger Bands will contract. Excuse me. Sorry about that. That cough snuck up on me. All right. The 5-day is closing today. So 5-day momentum pivots 24,200. And in this case, Bollinger Bands, telling the story here, we need to basically close above 25,620 on the 5-day chart to give a bias that we could test in and around that 28 to 28.5 area at the third standard deviation. I'll tell you that the longer that this kind of takes, the more likely it is that that's not going to happen, at least not first, before a downside test to around, in this case, 22,550, where the first standard deviation is. And of course, we've got that 20 simple coming in right at around that 19,500, 19,475 in this case. Now, this is going to update. So we're going to see where this is going to expand to. We'll see the... We're probably going to see expansion of the Bollinger Bands on the 5-day up around the $26,500 area, maybe more, maybe even closer to where the 3-day was at almost 27. Kind of coming in line where the daily is. Now, if we do see any closures below 22.5 on the 5-day chart specifically, we are targeting, around that probably what's going to become $20,000 area at the 20 simple. That's also where the daily low area is coming in. So that's where that's where we are on Bitcoin. I don't think that there's anything to be said about 28K until we start seeing that break above 25.3. And of course, if we see any closures on the daily below that 23,000, we'll definitely be looking towards around that where that 5-day was 22.5 to around where our first standard deviation to the downside is here at 22,184. That starts falling apart. We're looking at the mid to upper $21,000 area around this high to around 21.5. I would say is it's gonna kind of be the line in the sand for many before going down and testing that. Before momentum on those higher term timeframes really starts rolling to the downside, basically, and we really see some bearish lower term timeframe trends. In this case, they're only short term trends. Now, the 12-hour I did want to address here is pointed down on the Bollinger Bands here. So Stochastic is headed down, and volatility will have the chance to re-expand in this case, because we are below the 20 simple to the downside. Now, that's really only going to be aggressive if we go down and start tapping in and around that 23,416. And expansion will really get going once we're below the first standard deviation to the downside. In this case, below the second standard deviation at 22,725. So this is something to watch here, because as the 12-hour is setting up for some expansion. In this case, it is a bit of a mean reversion play at the moment. As you can see, the second standard deviation and the third standard deviation on the upswing here. So, if we do get a shot to the downside, I do think that things come back up to retest at the very least here on the 12-hour chart. So that momentum pivot's going to be 24,886 on the next 12-hour closure. So keep that in mind as we come into the Friday session, New York session in this case, which is, a little ways from now. But that number is going to come down to probably around 24,500. Where it's currently sitting at closer to 24,900. So if we do see things close above 24,900, we'd be above the first standard deviation, and that would imply targets up to 25.5. Again, that's, everything's Yahtzee right now. Everything's coming up around that 25.5 area, and then we come back to it later. Although if we did get a daily closure above there, then we can substantially raise those targets to around that 26.5. So that's going to do it for me today. I do have some other things that I'm working on that I'll just give you a little preview of right here that have to do with volume profile here. And you can actually take a look at this. This is the daily structure on an order flow chart. These are basically footprint candles. And in this case, I've marked out basically our breakout, our overhead resistance, and then the line to break, or SFP. And then I've got support down here and the line to break and or SFP to the downside. If we're going to see an SFP, that implies it would go up. And here on the top side, an SFP would imply that if we don't break it, we SFP it and we go down, which we've already basically done this high with this guy over here. And on this chart, I have marked the previous week's point of control. And that's where we rejected in yesterday's candle. And then we have our current weekly point of control, which we are trading. We closed below yesterday and are currently trading below. So that's there's more to come with this kind of stuff. I will start introing you guys to how to kind of utilize those volume profiles. You can see that it's basically a volume profile next to the green or red bars, right? And then we have the value area highs and lows are the blue bar, the blue area, and then the shaded area is the 60 or 70% area. So where the highest volume areas of the bars are going to be highlighted here. And I do want you to note something, and it's something that I pointed out in yesterday's video when looking at the volume profile or the session volume profile on TradingView. And this is essentially the same thing, where if you take out a value area low or a high or test into them for support and or resistance, and that's where you can kind of derive some of the intraday trading stuff from on those lower term timeframes as well. But you can see here that, you know, we closed here, we opened over here, we tested into, or we tested up and then tested back into the value area of the prior day's candle. You know, it supported it, then proceeded to open and test underneath of it, and then regained not only this value area of the candle over here from the 11th, it also closed inside, in this case, this red doji here, closed inside of this candle here. Next candle opened, took out the value area high of this guy up here, and then closed up there. This next candle was that nice break up candle or breaker bar that tested inside the prior day's value area and then moved up. We see again we had that nice move up right after that the next day. There on the 16th, tested up, got a very large rejection, and then closed inside of the value area of the day before, and then we've been chopping around ever since inside of this area that these two candles pretty much formed. You know, they formed the range up here from the 15th to the 17th, or the 16th to the 17th after the impulse up on the 15th. Sorry, misspoke there. But this has some other neat features that built into it that we can go over. One of my favorites here is not going to be the footprint bars and statistics. It's going to be, oh no, did I already, maybe it is the footprint bars. No, nope, nope. Well, I'll be darned. There is a setting in here that I wanted to show you that actually tells you the volume traded in each candle and the delta. Basically, it's just, you can go and look at the delta, but it tells you the, oh, these are the delta bars. That's not what I wanted, though. Interesting. I will have to, I guess, figure that out, huh? So we will see if and when I can figure out what the heck I'm doing. I know what it is. I found it. I found it. All right, so basically, you can see that since we had positive delta on these candles here, and we held basically the original candle that formed over here on the lows. We held its value area on an open and close on the daily, and then we had positive delta that pushed us up. And since then, we had 7 billion in this candle, but we had a negative delta. We had positive delta on this guy here, but only closing inside of that guy's value area. Negative delta on the next candle that tested. Negative delta on the highs again. We had positive delta, but we closed inside. Oh, we did actually close outside of the value area high. That's why we tested higher than the highs or tested the high on this candle here on the 21st. But of course, that rejected and closed below the prior day's value area low. And then we've got the Wednesday candle that basically tested down and then closed below the value area low of the candle the day before. We have yesterday's candle that is just a doji and basically has just a wider value area right here in on the lows here, and then we're trading inside of these three candle structures. So that's where you get the 24.6, which is also that point of control of this particular range that we saw from earlier. You're going to go and you're going to test the highs, right? And then if we do lose the value area lows here at around 23.6, 23.7 area, we're going to be testing in and around the actual lows of the range, and that's only wicks. So we've got wicks in here. We did have one closure in here. We quickly saw that the open the next day in the lower term time frames, this was like an hourly down here, and then an hourly up. So, and then this area as well is just all wicks in this green zone here. So above $25,000 has been very difficult for Bitcoin to close on. So lots of negative delta here, but holding this particular range better than not. But if we do start to see the cracks show, they're going to start showing, I think, probably, if not Friday, weekend might get fun. Sometimes weekends are fun, but usually they're pretty dull. If the cracks were going to show to the downside and or the upside, they're either going to happen today or they're going to happen next Monday, Tuesday time frame. I don't think if we just kind of crawl sideways, it's going to get real boring, and then our range will condense, and we can make some really nice trades based on some of the triggers that I've been discussing with you guys lately. So thank you for joining me. I am going to let you guys go. You have a wonderful morning, afternoon, and evening. No matter where you're in the world, please trade safe. And of course, as always, stay safe. And with all of that being said, Landy out.